Hey traders, I had a question about NVIDIA, but it's a general question about profits and how do I treat them. So here it is. I appreciate people sharing. I know it's not easy. I do it every day, twice a day. So this person said that they were up on NVIDIA about 120% in calls, and then boom, nosedive in NVIDIA. So most likely they're red now. And to quote, how the devil do I manage the volatility? To me, it is, I take it one level at a time. Now, I have to preface this, that this is not specifically about NVIDIA, although some of the comments actually apply, but it's more in general. I tend to book profits too soon, which is fine by me. I'm okay leaving money on the table. I'd rather miss 10 times the perfect top than to have calls that are green or a trade that's green and then boom, blow out to big red. The bad feeling I get, the bad effect in my portfolio and my feelings, my personal hurt is it's not worth it for me to try to squeeze out every bit of profitability. Now there are exceptions and there are ways. So here's to say it. How do I manage 120% yield? I almost never leave 120% win without touching it one way or another. I second guessed myself 3-4 times a day on something like that. So this is NVIDIA daily chart. To me, it is obvious that I should have been lightening up here, but it's not so obvious unless we zoom in. So let me zoom in. So this is a 2-hour chart, meaning every tick is 2 hours. So we recently had a nice bounce off of the December Christmas debacle. We got hit here. We got to here, we stalled, which was, one place to stall. That was obvious. I'm going to share why. So first of all, I usually book, lock, or trim any profit when it gets anywhere near 100%. When you double your money, I have to trim, book, or what does trim mean? If I have 20 contracts, I'll book half of them, if not all. What is book? I book all of them, and then see what happens at the risk of missing out on some upside. What is lock? Lock depends on how I'm long. So if I'm long the stock, I may sell some calls against it, some covered calls. I may sell, if I'm long calls, I may sell some diagonals or some calendars against them. So kind of like the covered call. If I have an asset, I sell calls against it. So in this case, once we got to here, I would have started to ask myself, do I book if I'm long here? I probably would have booked, and I would have said, I'll see if I re-engage later. You've heard me say that all the time. Why? Because look at what happened last time we were here. This was and last time before that. So obviously a fight zone. So what happens? They get back to here. Anyone that traded it here will trade it again. So the bulls and bears obviously agreed that there's some value around it here, so they want to fight it out. And what does that mean? That's resistance on the way up, support on the way down. We were rising. I expected them to fight over it. It would have been resistance. I don't know what happened in that candle there, but down. So if I had booked somewhere around here, that would have been an early book because look at what I missed out. But usually when I book, I reset a trigger to, hey, if they clear this zone, maybe I want to re-engage. So they dip and they come back to it, fight over it again, stall, up, down, up. Obviously, contentious zone. And then now. So what would I have done here? Let's say I re-engaged here. Trigger, I went long. Some pain, recovers. I probably would have gotten out here or here. Why? Because if I look left, this was a failure and a fight zone also. So also likely, for the same reason as here, to be R. Why? Because same people fought over it, they're going to fight over it again. Let me zoom out a little bit. Okay, so what if I go to 240? Maybe I can catch her. All right, so this is the same zone we were talking about. So when they fell out of, they already disappointed us not too long ago. They delivered bad report. Why didn't they tell us the whole story there? Things didn't change that much. But anyway, they tried to cover that, but they couldn't. Why? Because look at that. So this is a pivot zone. So if we go long NVIDIA, if anybody goes long NVIDIA and it recovers to 176, that would definitely be an exit point. Anywhere above 170 would be an exit point. Now, I haven't talked about the downside, but this is, I'm addressing how do I manage wins. I have to know where to get out. Where to get out is wherever it stalled before. That's a fight zone. Anywhere there was consolidation on the way up, it's going to be resistance. Let's say the stock was falling and it hits that level. I would expect them to use it as support. Let's say it was here and falling into it, because I look back there and they fought over it, and I say, okay, so there's a lot of action here. It's going to probably take over again and create some congestion, therefore support on the way down, resistance on the way up. So the answer is easy. When I have 120%, I'm booking. And sometimes I book and reload. Other times I book and reset a trigger, alert, whatever you want to call it. And sometimes I book a little bit and leave some running. It all depends on my thesis and what I want to do. I'm not always perfect, and I can guarantee you that doing the right thing is almost never the perfect thing to do. What does that mean? So doing the right thing is booking. But is it going to be the very top? Most likely not. And if I can hit the very top every time and the very bottom every time, I'm a genius, and I'm not that guy. I do get them every once in a while, but it's pure luck. I usually stick to, hey, I've almost doubled my money here. Let's not be pigs, and I'll book a little bit. I'll trim a little bit. Unless I have a reason otherwise. Like if I know something that other people don't, then I'll stay into it. But even then, booking, trimming, or locking is probably the better things. That's kind of how I handle the volatility indirectly. So yes, this morning was a blindside to everybody, and I shouldn't feel stupid for getting caught in it long, because the whole world was caught in it wrong. There was a time when NVIDIA did no wrong. Up here, I've heard people, you can rewind CNBC, people are saying you have got to own NVIDIA. This is the right stock going forward. They have their foot in everything, in screens, in games, in crypto, in cars, in AI. These were words that I heard all the time. Down here, everybody hates it. So don't listen to them and do your own analysis. So NVIDIA, now we're veering into NVIDIA specific discussion. So at 290 was too expensive. I don't remember the PE, but I can probably tell you it was over 50, 60, 70, whatever it was. Now it's down to below 20. Now it says 22. That this is probably is not dynamic. So after the dip in price, or maybe they adjusted their denominator too. So I'm not sure. So it's in the, it was 18 not too long ago. So a lot cheaper than before, but it's still more expensive than Intel, which is 11 or 12, maybe 10 even. So if I were to bet on the chips, I don't know if NVIDIA is a slam dunk anymore. The bloom is off the rose, or however you say that. It's poop. No longer doesn't stink anymore. I hope I'm saying that correctly. Up here, it could do no wrong. Down here, they have to prove that they're back in the game. And right now, it's like Chipotle. Remember when it fell out of the sky? It took a long time for it to get the credit back, and it never did actually recover the same way. So from a trading perspective, from Wall Street perspective. Okay, so now back to NVIDIA. Is it a knife I'd catch? No, not for me. Maybe from a trading perspective, somebody that can get in and out. But if I'm looking to swing this into like the next 3-4 months, or maybe 6 months, there's risk. There's real risk. What is it? Right here. What happens if they lose the one, whatever that is? Let's call it 120. Probably not. But what happens if it does? Yes, there's support around 108-ish. But if that fails, once this triggers, you can draw an inverse cup and handle here. That would bring the 60s, if not lower. A technician could probably tell you this is an inverse cup and handle that looks like this, and usually the drop will be about as big as this downward. For me, I look left and I see what happens. There's a big consolidation here before it broke out, whatever that year is, in 2017. So very easily could get to, not very easily, I can see it coming down to 108, 101, but it should have support there. And probably, the pundits in the news will say, oh, you've got to own it now. But I'm not catching this knife. If I want to catch the knife, I'll do it via the SMH, for example, or whatever, the XLK is it, the chips? Something that has chips that is not it. So technology sector, that works. Or even somebody else like Micron or Intel. Intel probably is a good idea, because It shed a lot of the froth. It still has, this is a weekly chart. It's holding up okay on a really bad day for NVIDIA. But, you know, there's no rush to do anything. Micron's down 2.5–3%. Intel, Xilinx was one that they loved recently. Whoa, Xilinx is almost flat on the day. So there are other stocks that own NVIDIA. I'm not chasing that one, by the way. I'm just talking about a point. So number one, to answer the question, yes, I do manage the volatility, but the way I trade kind of like handles itself. So 100% win usually is out of my pocket. I mean, into my pocket, out of my book. Meaning I book it early. I'd rather miss out on a few upside than get caught. Hindsight, nobody saw this coming, so I shouldn't feel stupid for having stayed in it. So what to do here? I don't double down, that's for sure. I don't add to it. Onus is on management to tell us that this was a fluke and we have a plan to go forward. I haven't read the note from them, but they basically said things are more terrible than we thought. Where do I chase it again? Above 162? Maybe. Where do I not chase it again? At 150? If it bounces here, I mean, here I either plug my nose and buy it for a bounce or sell puts in it, but not for me. I'm not doing anything with it because I chose to go long the SMH, for example, and I'm long other things. So I'd rather not do that right now. So anyway, I hope this answers the question. I really appreciate the honest sharing of missing out on upside, but things happen.